So good morning, everybody, and welcome back to our latest webinar. Today we've got Adam and Matt from Reliable Risk Management, and we're going to be talking about navigating garage insurance during this COVID-19 pandemic, and sharing some tips on what we can do to protect ourselves, certainly around this and into the future as well, because I think it's important that we're always being diligent while protecting our businesses. One thing I want to encourage you to do today that we haven't had a chance to do yet, but we're hoping to add this to a few other webinars in the future, is take some good diligent notes. So for those of you that are accredited Automotive Management Institute members, if you've got an AMI designation, this particular webinar is going to have a quiz associated with it at the end. I'll share that information with you once Adam and Matt are done, but this will be worth one credit hour of ongoing AMI credit upon completion of a short 5-question quiz. So again, take good notes, and this will apply to your different designations, and including not just the collision segment, because we believe that this also has applicability to the service industry as well. So it's going to be eligible for ongoing training for the service side of the industry as well. So if you have friends that have small businesses as well, that are part of AMI on the service side of things, certainly share this information with them and educate them on this. So we are going to, again, use a chat feature. If you've got questions throughout, please feel free to post them there. Adam and Matt and myself will be monitoring that, and we'll have a couple breaks as we go along that we can ask any audio questions as well. So with that, I'm going to turn it over to Adam and Matt and thank them very much for their time this morning and helping us out here. So take it away, guys.
Thanks. We appreciate being here. Just wanted to kind of give a brief introduction on who we are, what we do. We have been specializing in the collision industry space, the automotive space, for about 15 years. So that kind of ranges from the mechanic shops to obviously the collision industry is the bulk of it for, but paint jobbers, parts, etc. So kind of the whole gamut of what the industry's seeing right now. We're getting a feel for that from each different all over the nation that we handle. So part of that that we just kind of want to go through, we're an independent broker, so we don't represent a insurance company. We represent a lot of them. Every state a little bit we represent. That allows us really just to advocate for our clients, still have a fiduciary responsibility to our carriers. So we're still representing them. We're not, we still have that due diligence. So we have both parts, but our main job is to keep our clients insured properly. And so this time right now really has given us an opportunity to work clients with prospects with the industry to just help facilitate some of the tough questions that we're getting right now. So today, what we're hoping to accomplish in this, and definitely ask questions. We're fine with interjecting and stopping and jumping into different things. But real COVID-19 and how it relates to garage insurance policy, how that's affecting what you can do, the current trends that we're getting specifically to the collision industry because of some of the actions from COVID-19 for dates and the government federally enacted. And then one of the big items would be, how can we reduce your monthly insurances but not necessarily decrease your coverage? A lot of you have contracts that require you to carry certain coverages, so we're just help navigate those conversations so that you can have them with your brokers, with your agents, and just internally in your shops or your multi-locations to facilitate what's best for your company. So that's our goal today. Feel free to ask questions. I'll kind of jump in. The number one question that's been asked is the concept of business interruption coverage or business income extra expense. So that we get asked no matter the industry that we're dealing with. That has been the number one question. And so it's a tough one. It's one that we try to navigate carefully for all of you, and try to do that well. But it's designed to pay out the net income that you would have earned or incurred during a time that had a physical loss. And so they direct physical loss as an example would be catches fire and you cannot operate in the building, relocate. That would be a direct physical loss for business income to step in. And that's primary purpose. It's on a problem. It's not on a general liability form. Those cases, and so its trigger point is going to be based on property coverages. And so that's kind of the main question that gets asked. The unfortunate answer to the question from the that we're reviewing at this point has been an astounding. The carriers did not contemplate government shutdowns, stay at home, shelter in place as part of the premium, but also they didn't contemplate it in the forms. They put it primarily on the property side. So it's all direct physical loss. On this screen, my hope is you'll just kind of know the points, and we'll have this available for everyone, send it out as a PDF to send so that he can distribute out however you guys need it. But this gives you the totality of what almost every business income form is going to read. And we can pull them, the ISO forms, we can get you specifics. But if you go to the historic examples, which usually is where we fall, you're really familiar with that because you deal with it with adjusters and how they try to dictate the wages that you can charge and everything else in this space. But the definition is physical damage as a distinct, something that they can demonstrate in alteration. So the fire would be that. The only aspect that's kind of been obstructed in this concept would be if there was proof that COVID-19 was embedded in your floor, in your walls. That's the reason you had to shut down. There's some opportunity there could be coverage. And so that's been kind of the outside the box concepts that have been talked about at this point. Unfortunately, most of us across the country experiencing losses due to stay at home and shelter in place with reducing accidents. Really, that's been the primary drive of reduction in revenue. So this page, and we have a lot more resources we can send you as deep as you want to go on this, but at the day, business income, property form, that's where it resides. So the direct loss, the covered peril is going to be from the property side, whereas this really is falling more on the GL side or a government shutdown position that's reducing your income. So that's kind of the concept there that we'll kind of high level. If there's questions, we can dive into those as we go on and at our opening in a couple minutes. But so all policies for the collision industry at this point that we have reviewed do not have coverage for COVID-19, regardless of insurance carrier, whether it's a captive company, whether it's companies we represent. We have not found policy yet for the collision has a provision in it, endorsement that would allow for business interruption or the loss of them to be triggered. We don't want to make that an absolute. There are potential for could be used that are used in other industries like hospital, stuff like that, that potentially could have coverage there. We're just giving you the standpoint of hundreds of policies that we've looked at. This is the stance at this point that we've seen over and over again. And insurance carriers are sending out blast memos to agents basically saying the same thing. There's not coverage, things that you can. This is the stance at this point that we've seen over. So we'll put that out there at the end. We'll have all of our information available for you guys to do that. It's pretty and get back to you. Just highlighted what the form's saying, how it's reading. to give you the perspective of the business income and the coverage there. So that's for that section. Are there any questions? That's, like I said, that's probably our biggest question we're getting right now. And then we'll kind of transition into going through your entire policy of the areas reduce pricing without sacrificing the coverage and help you navigate those conversations internally. So I'll open that up if chat or the Facebook chat, if there's any questions, or if someone wants an audience, we could field that before we jump into the next.
Hey, guys, this is Jason again. I do have a question. Yes, given kind of this precedent, I think that's now been kind of set by this particular event, do you anticipate that we'll start to see more coverages for these types of events, or do you think it'll be a little bit more status quo in the future?
Yeah, that's a great question. So if we go back to probably the H1N1 event was the only thing that we have that's relatively close to this. There was a little bit of movement for a very short time to provide some coverage there where you could purchase that. Because this has been wide and far more disruptive, I think from legislation standpoint, but also from the carriers looking at ways to capture that coverage and be able to respond. Jason, I think the challenge is what do they charge?
Yeah.
And right now, you look at this, if they would have coverage in place, this would put most carriers, from what executives have said to us, out of business, because the losses, are 3, 4, 5 times what the insurance premiums are. So there's no way for them to stay in business unless they figure out a way to kind of fill in that void. They have to make money to pay claims, and sometimes they make, they don't make enough. In years ago, not enough. So that would, does that answer that, Jason?
Yeah, it does. Absolutely. Like I said, I was kind of thinking the same thing, like the astronomical cost of this is going to be unbelievable. So, I mean, it would, they may be available, but the cost to acquire it may be overwhelming for most.
Yeah. Yeah, no, great question. We see that on Facebook too. Yeah. Legislation, there's with regards to legislation, James asked, was similar to yours, but said, with legislation, you've seen movement. There's a lot of legislation, kind of quick reaction to this in terms of stopping cancellations of policies, to where even if you don't pay your bill in some states, they can't cancel your policy for 30, 60, up to 90 days, depending on the state, which we can send that out as well, but that's changing quickly. The workers' comp and how it addresses COVID, that in most pretty narrow. And so I think when you're looking at the insurance coverages that you have for your business in the totality of what they are, legislation is going to move, legislation is going to change the way that insurance companies, brokers, and agents react to providing you insurance and guidance going forward. Some of those things may happen to where a Liberty Mutual, a Travelers, a CNA, a Farmers, whoever, a Zurich, pick a carrier, has to pick up some of these coverages more immediately and government assist on the back. I don't know those answers. We've heard a lot of rumors, but I'll try to be careful in not misleading that there's anything of true significance that's been moved forward. Any other questions before I come into the next?
Not a question, but I did. You mentioned it briefly, so I just wanted to reiterate for everybody that may not have caught it. We've also got a number of documents that Matt and Adam have provided to us that will be available following the meeting. So those that have signed up and pre-registered we'll figure out a way to get those out to you. They sent us a number of different documents on some of the content they've got here. So we'll be sure to get those out to you following today's meeting.
Awesome. Awesome. Okay. So I'll go on kind of to the bulk of the rest of our presentation, which is what can we do? How it's affecting us. What can we do? So uh, this is not information to anyone would be new. I mean, we're seeing whether it's documents coming out from the big consolidators just to independent or micro MSO shops. Especially in the metro areas where states have stay-at-home orders or shelter-in-place orders, you're seeing in 75, 80, 90% in collision claims and activity in those states. So even the loose stay-at-home orders, we're seeing that. So it doesn't seem to really shelter-in-place or a loose stay-at-home. It's dramatically less. To catastrophically less accidents. So that line, the inability to get certain parts, all of these things, longer fulfillment potentially because of delivery of parts, essential in some aspects in comparison to medical supplies. Trucking industry is getting have to. So all of those things are creating a lot of challenges for the industry, a lot of items that we're trying to be proactive and just get you information of how to adjust now, readjust for cash flow issues, as well as just the new state of your business until this turns the corner. And so those areas that we'll be going through primarily will be in three areas in three areas. And so what we'll run through is the garage keeper's liability, the workers' comp, and the general liability. So those three areas Matt's going to run through, but you can use those with almost every carrier today to reflect your business, reduce your cash flow, or increase your cash flow, reduce your payments going out to insurance carriers, and become more reflective of today. A lot of them are making these immediately, helping navigate that because they know what's to come. There are a couple which I'll preface this with, have what they call non-auditable policies for the general liability or garage. They kind of intermix those two terms. That area is one that you have to navigate a little bit differently. But most of those carriers, at least from what we've seen, are willing to play ball, willing to make adjustments, realizing that we're in an unprecedented time. And although the policy is not auditable, they need to make changes so that you can effectively insure your business, but at a proper price. And so these three areas all kind of manipulate to your business and the state of your business versus your property coverage. Unfortunately, that one I'd be very, very careful to do anything with, because as times get harder, people less work, those types of things, we see vandalism go up, we see theft go up. So your property is going to be really careful they're insured properly, and they're very inexpensive in almost every state in comparison to your general liability, workers' comp, and garage keepers. So I'll hand it off to Matt, let him go through these and address the areas that specifically you could make an adjustment today and start seeing your cash flow increase from the amount of money that you're not paying to your insurance premiums for your next payment this month. So
one of the biggest questions that we get from our collision repair clients, aside from, is my business covered by COVID-19, is how can I reduce my coverages today? So that way when my next, insurance is in the mail, I'm not obligated to be paying as much as I can. And so our goal is always to, reduce coverage where we don't need to. So as Don, we like to typically leave your property policies alone, as in vandalism claims, especially when people, And so the three primary areas that we can touch on: your general liability exposure, your workers' comp exposure, your garage keepers exposures. But moving on to the general liability costs, most garage policies, the premium is going to be derived from either, your annual sales that you're doing per year, your total cost of payroll for the year, or however many employees you might have on average throughout the year. And so with the majority of carriers that we work with at Reliable, they're, for the most part, they're willing to make those revisions to, your projected annual sales or payroll, and even employee count if you have to let some employees go during this downturn. And so one of the things that we want to drive home is that reducing your projected annual sales or general liability exposure for the year does not reduce your insurance coverage. And so you're going to have the same limits when you reduce your general liability exposures. For most carriers, there will be an audit at the end of the year. And so you want to be realistic as far as, what you anticipate doing as far as sales, but lowering your projected sales on the general liability will not reduce your insurance coverage. And so similarly to that is your work compensation. That's going to cover your employees if they become injured on the job. Now, workers' comp, the premiums derived from payroll costs, and similar to general liability, I'd venture to say with all carriers, you can revise the payroll midterm. And again, sacrificing your coverage by lowering your projected. With workers' comp, your employer liability limits are going to stay exactly the same. The carrier is still going to pay out claims as long as you're paying your workers' compensation premium, but you will be able to revise your payroll midterm to reduce your monthly obligation. And so the last that we recommend, taking a look at on garage keepers policy is garage keepers coverage. And so your garage keepers coverage is going to be a physical damage coverage, very similar to your comp and collision coverage on your personal auto policy. So essentially for all the vehicles that you are repairing at one time, this is the physical damage coverage. If you accidentally damage the vehicle while working on it, if there's a hailstorm out in the parking lot that damages the vehicles, this is the coverage that's going to pick up that physical damage. And there's a limit to it, just like with all insurance policies. And so, with the economic turn and potentially working on less vehicles at a time, your work in progress might be significantly lower. Now is going to be a good time to revisit your garage keepers limits. What we typically like to do with our clients is, take a look at on average how many vehicles you might have overnight, and then multiply it, the average value of the vehicle you might be working on. And so hypothetically, if you have 30 cars in your overnight or even in the parking lot, and the average value of the vehicle is 20, we recommend, garage limit of $600,000. Just multiply that fit. And so with the downturn in production, you would be safe to reduce that garage keepers limit to a reason to properly cover all the vehicles that you're working on. Now, one thing to keep in mind, a lot of shops have DRP relationships that require contractually a certain garage keepers amount, and so we'd be happy to review those contracts with you to make sure that you're still compliant. But garage keepers is another one of the bridges that we believe can be reduced.
On those three areas, are there any specific questions maybe we can address? I know we ran through them relatively quickly, but the general liability and or garage liability, your policy dictate those terms kind of interchangeably for the most part. It may be on that subject that we can address with looking at that reduction, what are trends that maybe we could just help in that conversation for you guys.
reduce your coverage because there's less cars on your lot. I mean, assuming, you know, if we take what Mike Anderson said yesterday, that hopefully it's going to be the wacky racers when we get out there after this is all done, said and done, and things hopefully get back to normal at some point. Is an insurance company likely to, you know, if I say, okay, I went from 30 cars in my lot, now I have, and it's a temporary thing for a month, you know, once I see things ramping back up, am I calling back and then putting the coverage back to where it was to reduce the coverage for a month, or, you know, obviously it's a temporary fix, I think, because I'm really hurting.
Right.
I was curious. That's kind of what.
Yeah, great question. So in these three areas, so general liability, the garage keepers, and the workers' comp, those, and there may be, your broker could give you a different answer, but all of our carriers, we have binding authority with them. So we can make these changes every month. At some point, the underwriters may say, all right, guys, kind of make this a little bit more stable because the billing is going to get really complicated for the so they'll want to be strategic with that and think through it. So what we've recommended with the exposures, so general liability, and let's make the adjustments today, and let's revisit, and we can revisit it in 30, 60, and 90 days. That way we can kind of see the trends coming back, just like, you know, Mike Anderson's a great resource and obviously a very well-respected name in the industry. If that happens, which we all hope it does, then making that adjustment at that time is just an exposure adjustment. The garage keepers, a little bit more complicated, and a little bit more strategic of a conversation, because it would lower, but the reality is if you have 10 cars in your shop and you're normally having 4, and you don't see that changing for the next month, change, and if next month the floodgates of 50 cars, we make the change back. And so that one, I would say, to answer your question a little bit probably differently for garage keepers, for the care control component, that one's a little bit more in flux, where we'd highly recommend staying very engaged with your agent in order to navigate that one back and forth, because that could definitely happen. I mean, you know, if this all goes great, we have a great summer, and restrictions are pulled back, and they find some therapeutics and some drugs that are working to combat it, to ease one, and just give us an ability to, you know, to give a cure, or at least a way to medicate and treat COVID-19. That's changes what's going on. And so I think if that happens, it opens up, similar to what Mike's saying. But if it comes back in the winter, which has been talked about, then you may need to make that change again to those restrictions. Does that answer that?
Yeah, that makes sense. I'm good with that.
Okay. Yeah, you're welcome. Any others? Yeah, and on the chat that I agree with. I think at the end of the day, the way that we handle this, and it may work with our clients, but it can be risky. There's not an agreement with the broker consistently. Make the adjustment on the garage. Risky component of liability of the workers' comp, not as much. It's not reducing coverage. And if your accountant or your in-house bookkeeper, or however you guys handle your books, if they're calculating for the exposure for the cost, which you could get to where your payroll, you know exactly what your workers' comp cost is, tells your number of employees, you know exactly what your increase in general liability would be, then but you're keeping the cash in the short term to make sure that it's that trend. That's kind of what we do. So agreed with the comment on the chat that, you know, it's something that we really need to monitor and keep a reminder of, using technology like Boomerang or something like that to send back that email every 15, 30 days, whatever you need to with your broker to make sure that your vehicle's in progress or your WIP report doesn't dramatically change overnight on the garage keepers. Very true. Any others before we move on? All right. Yeah, so areas that we can help in nation, just kind of continue to sources for you with a legal source that has a ton of resources with HR components, hiring, firing, dealing with COVID-19, furloughs, navigate with the CARES Act, all of those things that we land out to you guys, however, and ladies, however that can get communicated to you. The policy review or analysis, if it's specific to the garage keepers or to the business income, we can just go through that and provide the analysis and send it for you through a PDF. Pretty easy to do that. We do it a lot. So that's something that Matt and I can do for you very easily, just to give you another picture of understanding of that. And through can help in the proposing of exposure changes to your current budget. If you have a non-auditable policy, which there are a lot of carriers that have that on the general liability side, that one's a little tougher to navigate. And so when you go to them and say, hey, my sales are going down 30% this quarter, and I make an adjustment on my insurance, if their response back is, well, your policy's not auditable, we can't make change, we can give you a narrative and some help to do that. We have a couple carriers that are that way, that are non-auditable. That was great for the last couple of years. We're shot 200, 300, 400, 500,000 increasing each month of work in progress. It was awesome. But in this time frame, it's more uncertain. There's elements, the auditable policies are far more attractive to make sure that you're not paying more insurance to be exposed to. So we'd love to help there however we can, and just be a support tree in your shops in any way that we can. So Matt and I's information will be on the last slide, and Jason has all of our contact as well. We can send this out via PDF, as well as a lot of resources that hopefully be helpful in navigating some of these challenges that you guys face. And it doesn't really seem to matter a whole lot what part of the year in. At this point, it's affecting almost everywhere. We have a couple pockets still operating as normal to some degree, but not very. So, well, Jason, thank you guys very much for letting us help in any way that we can. Is there anything else we can answer or do before we end today?
That's some great information, guys. Really appreciate it. I'll give you a couple seconds here for you to grab Adam and ask contact information if you want to do that. If you got any other follow-up questions for them. As I mentioned, we will be able to send out a number of different documents that these gentlemen were able to forward to me. So we'll get you to those as quickly as we possibly can. And the other thing I wanted to mention was that, one second here, I'm gonna stop their screen sharing. We do have some quiz questions that that these gentlemen put together for us. So if you are part of AMI, go to AMI, log into your account. You won't be able to find this unless you log into your account, and look for Collision Hub Presents Reliable Risk Management, Navigating Garage Insurance During the COVID-19 Pandemic. Short 5-question quiz. You'll get 1 credit hour for this today. So I've got it also tagged with reliable risk management, RRM, COVID-19 pandemic. So if you do a search for any of those, you'll see this come up. So we had a couple more questions. How will we be able to get documents you're talking about? So Donna will do so for all those that have registered in advance. We will send out a link or the documents. It's quite a few documents, so we may have to send a link to your to a OneDrive folder for you to download those. But we will send those out to anybody who registered in advance for this session. Any other questions for these gentlemen? Christian, you got anything on your end that's coming through?
Nope, all good on this end.
Okay. Okay, well, appreciate everybody's time. Up next at noon, Kristen, correct? Noon Central Time, we have Larry talking about OEM estimating, estimating of flying time for estimating for OEM information. And then at 2 o'clock, we've got Matrix Wand. They're going to talk about how to use Matrix Wand to identify location, mounting locations for ADAS and some steering suspension stuff as well. So I think Sergio is going to be presenting this afternoon. So again, come back at noon and at 2 o'clock Central Time. And until then, stay safe, everybody, and wash your hands. That's it for now. And again, Matt and Adam, thank you very much for your time. Appreciate it very much.
Yeah, thank you guys. Appreciate it.
Thanks, everybody.